This 12-minute presentation will outline the background, operation, and business plans for a fully automated stock market trading process called SMTP. Please note that this is not a day trading scheme, nor is it suitable for long-term buy and hold strategies. SMTP is the methodical application of semiconductor engineering control protocols to stock market trading. Though they are very different business areas, the stock market and semiconductor engineering share many characteristics, including complexity, large volumes of data, trend identification and analysis. So the question is, how can semiconductor engineering methods be applied to the stock market? I hope you will agree that the results are very encouraging. 25 years experience from various semiconductor engineering roles have been utilized in creating SMTP. Key skills applied include process control, experimental design, and Six Sigma. After starting with an overview of SMTP, the presentation will outline some traditional approaches to stock market trading. And then asks, how does an engineer approach the stock market? What does the engineer do differently from more traditional approaches? Then, a brief description on how SMTP operates. The next section will outline SMTP performance, including a comparison between the two trading algorithms and the S&P 500. Following that, a brief word on business development. Finally, the summary section, including the most important page of this presentation. Overview of SMTP. SMTP is a 100% automatic stock market trading and analysis process. Apart from some manual data entry before the markets open, all stock selection, trading and analysis is controlled by algorithms. The process uses a short list of 180 stocks from the New York Stock Exchange and Nasdaq markets only. Developed in Excel over 10 years, evolving from a manual entry database to a fully automated application. The technique is founded on engineering problem-solving experience. Structured problem solving is a cornerstone of engineering and has been applied here to analyze movements and trends. The emphasis is on disciplined reaction to existing market conditions, filtering out the noise and focusing on data-driven outcomes. The trading process takes a cautious approach using stop losses and trailing stops. The two main trading algorithms are currently outperforming the S&P 500 by more than 9% in 2018. Performance reports are available at close of business via the website. In this section, let's look at some traditional approaches to stock market trading. In general, a lot of emphasis is placed on prediction, second-guessing which way the market is going next. Single variable decisions are often the norm, price-to-earnings ratio, cash flow, etc. Decisions often tend to be opinion-based, with all the variability inherent to that. Traders latch onto messiahs, Warren Buffett, George Soros, axe analysts. There is a tendency to jump around from one investment strategy to another, based on the many sources of advice. Many people are looking for the next big thing in trading. Most people underestimate the difficulty in identifying long-term trends, and overestimate the value in drilling down into balance sheets, earnings reports, 10K, etc. SMTP takes an entirely different approach to stock market trading. An engineer observes. He or she does not have direct expertise in the stock market. Stock markets behave like a chaotic system, need to find order. Reactions to events can be illogical and contradictory. Easier to identify short-term trends than long-term. There is far too much data and opinion available, which of it is useful? If there was a magic formula to trading, would an expert not have found it? Anything that has happened before can happen again. So, a systematic approach to trading and analysis is needed. This must be repeatable and data-based. Change the emphasis from predicting what will happen to measuring what is happening now. Use this information to identify the start of short-term trends. U.S. markets have 5,000 plus securities, reduce this to a watch list of manageable size. Backtest the S&P 500 to identify the key fundamentals, analysts, and other data. This is a once-off analysis to identify a starting point for new algorithms and should not be confused with data mining. Automatically collect and track this data on a real-time basis. Organize it so it is clear and readily accessible. Use that data to create trading algorithms. The result is a multiple criteria complex decision-making system controlled by Excel. Now a few words on how SMTP operates. The basic strategy is to conduct long-term experiments using clean data in a system known in Six Sigma as PDCA: plan, do, check, adjust. Each experiment is written into Excel as an algorithm and allowed to trade. Trading results are then analyzed automatically to identify improvements, then new algorithms created. New and old then run simultaneously to allow direct comparison. Same data and stock list is used for all algorithms, always. Two of the best performing algorithms, out of over 1,000, are used for active trading using owners' funds to establish a track record. Excel 2010 spreadsheets automatically control the entire process including data download, algorithm calculation, buy-sell decision-making, website updating etc. These spreadsheets have been designed to operate like a standalone application using timed macros and VBA. Clean data is used to make all calculations. This is essential for analyzing performance and predicting measurable gains in future algorithms. The need for decision-making is completely eliminated. It is not necessary for the trader to choose which stock to trade, which market to follow, everything is automated. SMTP process flow. Before the market opens, the pre-market data updater spreadsheet collects fundamental and technical data from various sources. This is then transferred to the SMTP file. Once the market opens, the Medved Trader file collects price data for all 180 stocks, as well as market and commodity data. This is fed to the quotes file which then transfers it to SMTP. Algorithm recalculations are made with this new data. Buys and sells are identified and recorded within SMTP. If there is any trading activity in the two trading algorithms, this data is transferred to the Interactive Brokers Trader workstation via an Excel Dynamic Data Exchange file. These trades are then placed automatically to the Interactive Brokers account. These steps are repeated at 7 to 15-minute intervals while the NYSE and Nasdaq markets are open. At market close, the day's trading activity data is copied to the post-market data analysis file. Algorithm performance is assessed and improvements identified to create new algorithms. All steps described here are performed on one PC. The process is expanded by adding multiple SMTP files, each with different algorithms, all using the same input data. There is a limit of 4 SMTP files per PC due to file size, though multiple PCs can be networked, each with 4 different SMTP files. SMTP performance versus the S&P 500. Algo Rev 1 and Algorithm D are the two active trading algorithms. A Rev 1 started in August 2017, D in April 2016. Both have outperformed the S&P 500. Also shown are the two previous trading algorithms, A and B. This graph is updated daily on the website. From the homepage, select Performance, then Current Performance. This will lead you to the performance graph, which is updated daily. Also, a list of daily trades and key metrics is shown in the next page. The trading process has 3 main selling points. Current overperformance. Now greater than 12% versus the S&P 500 year to date, and 50% since inception. Continuous performance improvement. Improvement projects are delivering even better returns. Flexibility. Modular software design gives flexibility to test many types of algorithm, including those identified by the angel investor. Also, Each added PC allows evaluation of 800 more algorithms. SMTP is at the prototype stage, so a cautious approach to investing new money is offered. Note that owner is already trading with $135,000 of own funds. So the angel investor is asked to: firstly, observe the process, anonymously if preferred, to establish credibility in SMTP. Goal is to establish trust by offering free real-time access to all trading information via the website. Then, open interactive broker's account linked to owner's account so that trades can be replicated. Finally, commit to investing in SMTP, possibly using profits from IB account. It is important to note that the owner will not have direct access to any angel investor funds due to master/client account structure from interactive brokers. SMTP uses an interactive broker's account for trading. The account structure is illustrated here, showing a master account controlled by an advisor on behalf of various client account types. This is expected to be the basis for any future business relationship with angel investors. So, in summary, SMTP trading algorithms are substantially outperforming the S&P 500. Analysis of current performance data is ongoing, with the expectation that this delivers even better performing algorithms in the future. Angel investor help is now needed to prolong the project. Finally, the most important slide in this presentation. On the next page is an improvement project sheet designed to answer the question: can observed impacts translate into improved algorithms via data analysis? This is a snapshot of the project tracking page where each improved algorithm is compared directly to its predecessor. Data for this sheet is automatically updated after market close each day, and is closely monitored for changes in observations. This system allows for a large number of improvement projects to be run without the need for manual intervention. Some of these projects are third generation from the original and improvements are still being observed, so the limitations to SMTP as a process are not known at this time.